I remember the first time I came and saw you, I had a box. Do you remember that? And a box full of real estate.
I do.
And I remember you just shaking your head like, what is this knucklehead doing in my office?
It could have been you or some other person, because invariably most people come in that way.
Yeah, that's exactly what I did. I brought in, and I just remember you shaking your head going, what am I going to do with this?
It was a little box.
It was.
You've been successful, and your box is bigger now.
It's changed. It's changed. One thing I'm not sure that you actually know is I went around early on, right when I was getting into real estate. I said, I'm going to do this forever. I'm just passionate about real estate. I want to be in and around it no matter what. And I had asked a lot of the people who I wanted to become like, some real estate developers, highly successful brokerage companies, investors, who they used, and your name kept coming up.
Well, that's a tribute. That's wonderful.
Yeah, and that's how you got stuck with me. Your wonderful reputation. But with that, let's get right into it. What recommendations would you have for an agent who wants to file, let's say, their own taxes?
I don't want to be self-serving, but they should at least seek some professional help. They really should. I would at least check with a CPA, get some free advice, sit down, learn what it's about. Because I sit with people all the time. I'll give them the time, because I never know what it's going to turn into. So I'll give them the time and come in, see what they're all about. Sometimes it's not a fit, most times it is. And invariably they're going to walk away, hour with me, they're going to walk away with a lot of good wisdom that I'm happy to get them started that way.
Yeah, I remember that same meeting that I brought my goofy box full of receipts. You had, after that, and when we filed taxes, you had actually found, I can't remember what I was, 23 at the time, but you had found mistakes that equated to about a $10,000, that's what I remember, it was about a $10,000 tax makeup from the prior year, because I was doing it myself right out of college. I did like a turbo tax or something like that, but I didn't code things right. And I just remember thinking to myself, well, Ken and his group had paid for themselves for the next 3 years. That's kind of how I justified it. And we've been together ever since then. So
I used to say will cost you nothing, but it costs you a little bit.
Yeah, right. Yeah, I'll challenge that now. So at what point of setting up a business or starting out as a realtor would you recommend somebody meets with a tax accountant?
You know what, I would do that as soon as you can, as you're setting up, just to get off on the right foot and get yourself organized. That'd be my answer.
Yeah, awesome. So questions a brand new real estate agent should ask their tax accountant. So like if they go to seek wise counsel in a tax professional, what are some questions that new agent starting out a new company should ask?
I would ask that CPA or tax preparer or tax professional what their mission is. That might sound corny, or at least what their tagline is. Ours is, we promise to know you and to help you. That's our promise, and we at CLA believe deeply in that, and that to us says it all.
Yeah,
we'll get to know who you are, what you're about, and we're going to help you as you go along. You may not need real strategic stuff every year, but there's always stuff that comes up, and you're going to need us. To answer your question, more is this prospective professional should really drive the conversation. They should be asking you, probing you, what are you about? I know you're going to be a real estate agent. Do you own anything else? Because it all has ramifications.
So the top professionals, accounting professionals, are actually going to almost interrogate you. They should be asking you really good questions, if I'm understanding that correctly, and going. That'll speak to their mindset.
Right. That'll speak to their mindset, and really that you're just not a commodity that we're going to we're going to just bang out a return and say, here's your results. Oh, you owe a bunch of money, or oh, guess what? You're getting a big refund. No, our mantra is to plan, to help you, maybe even call you before, you know.
Yeah, I can attest to that.
Yeah.
You would call me. You would call
with
me
ideas.
With ideas. You would call me and say, "Hey, right now through the legislation, there's this." You would spout off some things that I didn't I wouldn't know about, and you'd go, if they vote it in, it's going to affect you this way. If they don't vote it, we're not going to do anything. Or you would shift and move based on, because you know myself and my business.
Yeah.
There we go.
And
Absolutely.
everything else that you're about. So that's nothing's. No questions are really off limits in that case.
All right, so let's talk about some of our real estate professionals who might have they've been selling for a while as an agent. They've got some good business going. They're not new. They're starting to let's say scale up their business. Should I have an LLC, an S Corp? They're asking these different tax structures, and how would you go about advising them when they go, you know what, I'm starting to do a lot more business. This is turning into a very serious business.
Right.
What would be your some advice for somebody like that?
I guess my initial advice is always start simple, because a lot of people get into it and then they end up, it's not for them. So it's a Schedule C, a sole proprietor, a single member LLC, which is just you. That's a sole proprietor. It's just you got some legal protection there. So that's easy in and it's easy out. Okay, so once they start scaling, the next step would be an S corporation. If it's just them, you get some self-employment tax savings, and there's some other goodies there. But that's typically when the tipping point is when you have employees. Okay, when you have employees, that's where you become an S corporation, because you have to end up doing payroll and pay yourself, and you're already going to be paying employees. So to me, when you have other people working for you, that's when you can jump into that S corporation setup. It is an extra tax return, more fees involved, but there's certainly benefits, and your CPA or advisor can weigh those benefits, but that's when you do the jump, when you have employees.
Okay, so when you're going from producing, you're producing by yourself, and you go, you know what, I'm going to start making a hire. I'm going to hire that first assistant, that executive assistant. That's when you should really go, okay, I should really talk to my tax professional at that point. What about like income ranges? Like if somebody starts making $200,000 a year, they should be obviously consulting a tax professional all along as they scale. But let's say they go from making $400,000 or $40,000, and then all of a sudden they jump up into this, $200,000 range. What's your advice there?
See, the one benefit of the S corporation versus the Schedule C is saving some self-employment tax. Because basically anything that you can do at the basic Schedule C or single member LLC level, you can do at the S Corp. They both flow through, they all go to your personal return, but there's some self-employment tax savings. So if it's just you and you're making a whole lot of money, fortunately, the Social Security tax level is only at about $128,000 at this point. Okay, and then it's just a little tiny Medicare tax after that. So if you're making a bunch of money and it's just you, it's hard for you to justify a low wage to save some self-employment tax when you're the only one generating. That's why you need employees and assistants and all that other stuff to garner some savings there.
Okay.
But again, it's just a self-employment tax game, and it's nothing to do with income taxes, because it's all coming to you anyway.
Let's say you're sitting down with an agent. What's your favorite thing that an agent and their business, like when they bring you, like for keeping track of their profit and loss or keeping track of their expenses, like what's some of your favorite software or programs that you wish that more people would use?
Well, you can go to Excel, or you can go to QuickBooks or Quicken. Those are just basic little things that you punch info in and it adds it up into little categories. That's all it takes. It's just being a little bit organized and summarizing things, and then the beauty of a QuickBooks or Quicken is that you can ask for one line item like meals and entertainment. Hey, give me a screenshot of all that's in there, and then I can quick scan that, or
So you can look through it and go, yep, all that should be in there, or no, it shouldn't.
Yeah, because some of those accounts have ramifications, right? So some are deductible, some are non, some are 50%, those kind of things that I have to look for. So if it's organized in little buckets, little line items, and then you can expand that, that's all you need.
What's like a common mistake that you see real estate professionals making?
Save some money for taxes.
I would agree with that completely. I can't tell you how many top producers that I've seen that I've watched their career that they shot way up, and then they put themselves in a massive hole, and they spent the next 2, 3, 5 years paying back that tax, because the federal government doesn't go away, right?
Yeah, no, they don't.
They show
no,
up.
they don't.
So so getting started. I mean, I think you always advised me was when I was getting started, as soon as I'd make $1,000, just move 30% off to the side, right off the top. Don't even right off your gross commission. If it's $1,000, move 30% off to a side into a separate tax account. I do that for all my businesses, and it just sits off to the side. Don't touch it, right?
Mm-hmm.
Yeah.
And if it accumulates, or we do some things that you can do to create losses, and you finance them, take huge depreciation, etc., that will, make that 30% unnecessary. That's when we have the conversation that you got a little much in there. Take it and have some fun.
Every year,
or reinvest.
Yeah, that's one of my favorite times is when Amy tests and you talk and say, "Here's how much you oversaved. Now you can go use that for something."
Yeah.
What do we need to know about tax deductions? Is there any ones that you think that being in real estate that we should be aware of that are maybe the biggest deal?
Really, almost anything that you spend promoting your business is tax deductible. That's really don't just look for the couple things. Obviously, there's mileage, vehicle to get you around. Gifts, dues and all that kind of stuff. But there's some things that you can, subscriptions and stuff that may be quasi-personal, that, the subscription to the paper, you can push that into the deductible bucket because it's relevant to you and your business. So think of those things that may be quasi-personal that you can push that way and get a little benefit. The other thing would be, having an eye on a SEP plan or some kind of profit sharing for yourself that you can tuck money aside. That's a great deduction.
Yeah.
And it's deferral to the future.
Sure.
Absolutely.
So anything promoting our business. So if our agents buy T-shirts and it promotes their business, that's possibly a deduction.
Yeah. All that stuff.
When in doubt, keep track of it and ask your tax professional would be a good.
Yeah.
If you bought something for your company, laptop, computer, anything like that, keep track of those. Get it to your accountant.
The one thing that wouldn't be is like clothing like this. Hey,
right.
You gotta be clothed. So
to be in business,
you should.
You should be, right?
Yeah, not in every industry.
Yeah, right.
But no. Anyway,
how long should business owners keep their tax records?
The standard answer, Caleb, is 7 years. And that's the standard answer.
Okay. Okay. A lot of our agents hire contractors, so they will. They'll hire someone to help them with marketing. They'll hire a company. Maybe they'll do it as a service to their sellers. They'll have a handyman help them out. What should our business professionals know about hiring independent contractors to help them in their business?
Okay. I do get that question a lot. And you mentioned the word hiring a company. I mean, it's that's a good point, because you're hiring, if it's a contractor, it's independent contractor, it's somebody that's in their own business. That's what That's what it should be. They're in their own business. They're doing business for other people. And typically, you got to understand that if they're not a corporation, then you're to send them a 1099. Okay, because it's in your business and you're hiring them. You spend more than $600 on them. You are in a business, so you're supposed to send them 1099.
The responsibility falls on you.
Falls on you as your business owner. You're the payor.
Right.
Okay.
Right.
The other thing you speak to is, are they contractors or are they employees? Okay. So if they're your employee and you direct and control basically them and their time, then they ought to be on your payroll, and you're doing payroll and withholding taxes from them, and that's something to pay attention to.
Okay.
Okay.
Let's say I'm an agent looking to make that first hire, but they're debating between whether they should go salaried or hourly. Do you have any thoughts on that and what we should do there?
Most of the people that an agent's going to hire are going to be hourly people because they're not qualified for that salary. I mean, a salaried person has certain parameters. They have to be basically a professional, or they have to be in some kind of supervisory role to be paid a salary. So if it's a reception person or somebody that's an admin assistant or that would be that'd be an hourly person, which then you're concerned with overtime if they work more than 40 in a week.
Okay.
And you pay them overtime.
Okay.
Time and a half. So.
Okay. Let's go to like fix and flips. A lot of our agents will do fix and flips. A lot of them are interested in doing fix and flips. What are some things that people need to pay attention to if they're going to enter that game?
If this is going out to agents, then they already have an edge.
Okay.
Because I've seen a lot of people doing fix and flips, and you have to have an angle. Agents are good because they control the buy and sell of that product, and if you're subject to a 6% fee every time on both ends when you're doing this, that's a tough. You gotta really do it right to get there. The other people that do well in this are the people that scale it, like yourself. You scale it. You've got contractors on speed dial that are depending on you for a lot of work. Then you get, you got an angle there, or the contract people that are handy and can do some of the stuff themselves. They have an angle. So that's to me who's been successful in doing it.
Sure. So let's what tax consequences. So somebody's going in to buy. I know you walked me through these scenarios several years ago, but let's say somebody's going in to buy their first flip, and they talk about capital gain, but they're buying it to flip, and maybe they're going to make that into a company. Yep. Can you walk us through a little bit about how they're going to get taxed?
Sure. It's intent up front. So if your intent is to flip a property, buy it, fix it up, then sell it, the way it works is you're building a piece of inventory. Okay, your initial buy is capitalized, and then all the rehab is capitalized. Okay, now you got a chunk of inventory that's ready to sell. So you put all your cost into it. If you happen to have to hold it for a period of time, then your carrying costs from when it's ready to sell are deductible as period or carrying costs. Okay. And that's really only concern if it spans a year over a year end. Okay, because otherwise if you build it, sell it, it's all deductible, and you compare what you got for it to what you put into it. You're building a piece of inventory, and that's ordinary income.
I think that's
not capital gain.
It's ordinary income, not capital gain.
It doesn't matter if you happen to have to hold it for over a year. Okay, that's a problem, but it's still inventory.
That was the biggest thing I think I've learned from you with real estate investing, and it goes all the way through to commercial too, is when you go into that asset purchase, the intent of what you plan on doing with that affects how you get taxed.
Yes.
The
intent and the follow through.
Yeah.
If your intent is to buy it, rehab it, and rent it, then you get some favorable repair stuff after it's habitable. You actually advertise it for rent. You get renters in there. Sometimes it's your success that helps you. Getting a renter in there is proof that it's held for rental, or that you're advertising, actually spending money to try to get it rented. Those kind of things. It's intent, and then
how you execute it.
How you execute it. That's right.
Okay. Yeah, because your intent can change.
Yes.
If you're buying as a flip and you go, you know what, I really want to hold this. That's something your tax professional should know.
Yeah.
Right. You went in with the intent to flip it, but then now you're going to hold it as a rental.
So you start depreciating it, and hold it as a rental, and then once you get over a year, then you're in that capital gain territory if you sell it.
Right.
Which is a
benefit. What do you see the biggest advantage of buying and holding real estate, tax-wise?
They generate cash flow, and the aggressive accelerated depreciation rules that are available for real estate are just phenomenal. So you can offset your any income you possibly have through depreciation and create positive cash flow. And if you're building and you're scaling, then it works beautifully. Works beautifully. The government is supporting your effort.
Supporting your
effort.
They
really are.
Yeah. So from the tax side, you're seeing that the cash flow that assets produce, that these real estate assets produce, plus that depreciation factor. So if they made $100,000 in sales, and then they have depreciation, that could lower their tax liability.
Yeah.
Yeah. Yeah.
And people are jumping up and down about how Mr. Trump has losses on his tax returns, and he's building a real estate empire, and
he's got a lot of depreciation.
That's how it works.
Yeah,
absolutely. But it's in the code and done that way for a reason. So people go out and actually buy and build and create space for others to use.
Do you see real estate investing as a great place to build wealth?
It's a phenomenal place.
Right. We teach our agents to the only houses that they should buy and sell are the ones that they don't buy themselves. The only ones that they should ever try to sell are the ones that they looked at for themselves first. Like, get them in that mindset of go after it for yourself first, and if it doesn't work, then get out there and buy or sell it. Those are the ones that you should buy and sell. Are the only ones you don't take for your own portfolio.
Yeah, it does. As you know, you're a great profile of an investor. You've done it the right way and are disciplined about it. So you're disciplined. You make money on the buy, and you're disciplined with your financing and being conservative on it. If a bank hands you financing, that you're not turning that into boats and airplanes and things like that until you can really afford it. And so it takes discipline up front to get the ball rolling.
I completely agree. I completely agree. And you gotta be creative and all that. Biggest opportunity for being hurt financially or with your taxes in real estate investing. What's your opinion on that? Like, what's the biggest risk with investing, would you say?
Economics.
Okay.
An economic downturn.
Okay.
I've walked through that. Bad things happen to good people, even solid people. So it's just a matter of location and when you started out. If somebody could be really good in starting out, and then you hit a market crash and your building's worth half of that it was before. Well, you've seen that. You've got some deals off the backs of other people that had less fortune, and it can happen to anybody.
Right.
It just can happen to anybody, and that's the toughest. That's the scariest thing. That's what takes the guts to be able to do that.
If if I think I'm hearing you correctly, you what I think you're saying is that in real estate, you go out, you purchase assets, whatever it is, then you where you get in trouble is when if the economy shifts and all of a sudden you're collecting half the amount of rent, value's worth half, but then you still have the full debt service.
Right. Or collecting no rent.
Or collecting no rent.
How many times have we seen, now it's Shopko. They're gone.
Right.
Who's ever...
Right.
Oh, that's a tough situation.
But everyone said they had a corporate guarantee.
Yeah.
They're like, they're corporately guaranteed. It's like, well, they're loaded with debt, right?
Mhm.
Yeah, that's the biggest. I think that's my biggest thing I see with real estate is when people get in over leveraged, and then they have then economic downturn, or they don't have enough cash reserves, and then their liquidity's not there, so it can really catch them in a bad spot.
Yeah. So the way to do it is to start slow and get there. Have a plan. Start. Learn the ropes.
Yeah.
Get some good ones under your belt, and then you get bigger and bigger, or branch out, diversify.
Sure.
However you look at it.
All right. So give us your best advice you ever given, whether it was taxes or anything.
The good Lord says, treat people the way you'd like to be treated. And it goes around, it comes back around, karma, whatever you want to call it. Just be a good, don't be a pushover, but be a good solid person out there in business, and understand that you don't have to win all the time, and everybody can win.
Yeah.
A fair deal, everybody can win and get something out of it. So that's really what, and that should permeate everything you do.
The golden rule. Well, I appreciate that.
Yeah.
Well, thank you for your time today. I know you've made a huge impact on my business, and I'm grateful that you're here to share it with other people as well. Would you be all right if we put your contact information at the end of the video in case anybody wanted to get a hold of you or your company about possibly having them get a second opinion, or possibly some new business? Okay.
Absolutely.
All right. Well, thanks for your time. And everybody, Ken Zacharias with CLA. He's my tax expert. So thank you.
Thank you.